Good morning. Again, the weekly chart of sterling. Now, I know last week we had a little dip down below that 23.6, coming in at 129.06, but really wasn't hurt much on the downside. 128.67 was the low, and we are still long and holding longs from 129.02. At the moment, currently, we're trading around about the 129.35 area, so we really are just slightly up on where we closed on Friday. I think that we still go higher. I can't see any reason to sell sterling at the moment, and we do, I think, have this basing pattern down here. Obviously, if we scroll it out and down, you can see that we have held above this 119.5 that we had way back in October 17. So I do think that there's no, for me, I think sterling's a good currency. I think that when all the rest of the world looks like it's going to go down the toilet currency-wise, obviously apart from the dollar, I do think that our currency is looking quite good. You know, if you look at the sterling against other currencies, and I look at it against Kiwi, Swiss, CAD, Aussie, slightly down today, but overall it's looking quite positive. So the weakness that we have been seeing really is mainly only over against the dollar. Now, obviously, we have come down against the other currencies, but, you know, nowhere near as far as what we have done against the dollar. So where are we going this week? I think as long as we can maintain above that 129.06 and last week's low, there's no reason why we can't trade higher. We've got these weekly moving averages. I'll just drag them up. And if you can see the 9 and the 55 week period is coming in at 130.60, 130.53. So there is room for us to go up to these higher levels. I think up there I'm going to be looking to cover sterling because I don't like to run it too long. You can lock in your profit, and don't forget, you can always go back in. So if sterling breaks 130.70, we're back into longs, and we would be looking for 131.78, 87, that sort of area. We do have, as I said, this base pattern. We've got this little bullish pattern here. What we do is we assume this is the pole, and when you get lower highs and lower lows, it's normally a bullish sign. We've got our weekly pivot coming in at 129.30. We are just around oscillating at that level. Let's take a look at the daily. So again, you can see clearer the big long move up from the beginning of this year. Down we come, and we haven't even sort of gone to the 61.8 yet. Now I've got this descending wedge pattern. That is normally a bullish sign. You've got the 200-day moving average coming in with the 9-day moving average, and the 200-day is at 129.58. Now obviously when you get to these long-term moving averages, especially the 200-day one, you have to sit back and see whether or not the market can take it above there, but more importantly, close above it. So if we struggle at 128, 129, 58, 60, that would be my clue, is to get out of longs, wait and see, go back into longs after we break that. If we do break that, as I said, in the weekly, we've got a very good chance of trading higher towards that 131.87. But before we can do any of this, we have to look at the next big level. If you look at that level there, the 38.2, you can see we're coming in around about 130.24. Now that is also coinciding with the 21-day moving average, which is at 130.20. So all to play for. At the moment, we had a little wobble, little tiny wobble on Thursday. We went back above this pattern on Friday, and at the moment we are above the daily pivot, which is at 121.12. As I've said, I don't see any reason at the moment to panic out of longs. If you look down at our technical indicators, you can see all three are pointing higher from extreme lower levels. So that's my view on sterling this week. Good luck. I'm on the desk. I'll catch you later.